Hey everybody, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video. We'll be talking about one of the changes in Orderflows Trader 7 that deals with delta divergences that I think can have a good positive effect on your trading. But before I jump in, if you appreciate my videos, be sure to subscribe to the channel so when I post new videos, which I hopefully will be doing as soon as I recover from this bad flu or cold. It's definitely not COVID because I've tested twice already for COVID and it's not COVID. But it's just knocking me out. That's why I haven't been able to get many videos out recently. We've recently released the Orderflows Trader 7, and we've made some nice changes that I think kind of help a lot of traders. So what I want to talk about today is the delta divergence, and that's these gold areas on the chart. Okay, so in the indicator setting, let's just pull it up here and take a look. So you can see here, delta divergence, right? It's enabled. And in the past, what we had always drawn the delta divergence at is appearing at the high of the day or the low of the day. Because when you would have a delta divergence, you would have a new or equal high with negative delta. That would be a bearish delta divergence, or a bullish delta divergence would be a new or equal low with positive delta. And we took it a step further because, if you're looking for a reversal, which, if you're looking at divergences, you are looking for the market to reverse itself. So what you also want to see is the price action in the bar. So if you're going to be looking for a bearish delta divergence, you're going to need a new or equal high with negative delta and a red candle. Or for a bullish delta divergence, right, you're going to need a new or equal low with positive delta with a green candle. So you can see here, right, the green candle, positive delta on the new low, or here the red candle on the new high with the negative delta. And here was the delta divergence, okay, as well. So there are going to be times where you have delta divergences, like here or here. Sometimes, if you're just looking at a delta divergence by itself and trying to trade it by itself, I think that's kind of a recipe for disaster because, especially in a trending market, if a market is moving in one direction based off of, just strong directional flow, everyone's piling into the market, you can get run over, right? And because you're going to see some divergences, and really all it is just people taking money off the table, that they're taking profits. Okay, so one of the ways that I've always advocated for the last 10 years, if you've watched my videos since I first released the software, is when you have a divergence with a bullish ratio right here, 0.61, or a bearish ratio right here at 136. The ratios are going to appear above or below the bar, okay? And with the Orderflows Trader 7, okay, it's going to appear, any bullish ratio will appear below a green candle that meets certain requirement. So you can see this bar here no longer has a ratio, it just has normal order flow. In the past, we used to actually draw the ratio number there. It would just be a black color, but that was confusing some people, so they asked us, hey, can you not show us the ratios that don't matter, just show us the ratios that matter, like here and here, 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 right, up here, here, here. And what we've found a decade ago, right, and we've been teaching traders this for the last 10 years, traders are still using it, is when you have a divergence and a ratio, that's a good trade setup. Because what is a ratio? There's two types of ratios. There's a ratio bounds high, there's a ratio bounds low. Ratio bounds high indicates price exhaustion. Ratio bounds low indicates price defense. So you have price exhaustion or price defense, okay? And so imagine, right, market runs up from the low all the way up to a new high. Okay, you have a divergence here. Maybe this is just some profit taking here. The market comes down a couple of ticks, then reverses, goes up to new highs. Now we have a ratio bounds high, which indicates price exhaustion. So now what do I got? Well, I know I've got some strong selling because I got negative delta. Okay, so I got negative delta at a new high, but based on the ratio, the 136, again, it doesn't matter to me what the ratio is, as long as it's a red number on top. To me, that is a signal, okay? So I know I got price exhaustion. So after a move up, I got price exhaustion coming in. at the high. Not only that, but I got aggressive sellers coming in because I know I got negative delta. That's what's causing the divergence, right? The negative delta at the new high. Okay, now, so you can see, like, this morning, this morning, I say this morning, this was last night at 11:46 and up until this morning here at 7:45. There's a beautiful move from the low all the way up to these new highs. Finally, you get the signal. Just going back to yesterday. Well, there was that one at 9 o'clock, but there was a little buy here the night before. Market went from the low up to the high. Now, what we've done with the new version of Orderflows Trader 7 is we've given you now the ability to look at swing highs and swing lows with divergences. Okay, so let's just go here to the delta divergence. I'll enable the swing filter. Okay, I'll disable the daily high and daily low. So now it's going to show me divergences at swing highs and swing lows, as opposed to just at the high of the day and the low of the day. Okay, so here now I got another divergence coming in here. Okay, but there's no ratio there. It's just a divergence. The day before here, right? Excuse me. Now I've got divergence plus a bullish ratio, price exhaustion. So I know the market sold off from a swing high, or in this case, the high of the day, down to the swing low. There's some price exhaustion, and then aggressive buying is coming in. So you couple the price exhaustion with, in price exhaustion in this case, is the aggressive sellers that are getting weaker and the aggressive buyers are getting stronger. Well, if the aggressive sellers are getting weaker and the aggressive buyers are getting stronger, chances are the market's going to go higher, which it did up to new highs. Here, okay, it hit the high of the day, no divergence, it's a bearish ratio. Then it came down here to a swing low, right? 135, it's telling me. So it's a bullish ratio. Similar thing that happened here. It's happening right here. You've got a divergence. You've got price exhaustion. The aggressive buyers are stepping in. Market moves up to new highs. Now, this trade and this trade would not have appeared, right, if you're only looking at divergences on swing highs or swing lows. So, for example, I'll just show you, right? If I'm just looking at delta divergence only on swing high and swing low, right? That trade's not there. That trade's not there because it's only looking for divergences at the highs or lows of the days. And imagine, that just opens up a whole new layer of trades for you, because now you could be looking at swing highs and swing lows. Now, another thing that, again, for some traders, it's, trying to watch and see these, that's all they do. They just sit there and watch it. And just, one little trick that some traders do to make it a little bit easier to make it stand out more is under the order flows ratios. What they do is they draw out the zone either fixed 1, which would highlight this whole area around the ratio, or they're going to draw it out until tested. And it's just easier when you see the red zone butted right up next against to the yellow, or the blue, like this one right here, right up against the yellow here, right? It just stands out more here. Okay, here, here. So, again, that's just one of the little changes that we've made. Here's a nice bearish one to the bullish one. Here's a bearish one here. It's a bearish one that just went sideways on you. I mean, it came off a little bit, went sideways, made a new high, and then sideways again. but it was a bearish one that went nowhere. So again, hopefully you can see the possibilities now of looking at not just delta divergence at the highs and lows of the day, but the importance of looking at them at swing highs and swing lows. Okay, there's no rule that says a delta divergence can only appear at a swing high or a swing low. Of course not. Delta divergence occurs when there's a new or equal high. It doesn't have to be high of the day. It could be a swing high, or a new equal low. It could be a swing low. Okay. So again, I hope that's going to get a few traders thinking, how they could use this in their own trading and benefit from it, because that's at the end of the day, all order flow is, it's data, right? And what Orderflows trader does is it puts the data into an easy to read format so that you can understand what's taking place in the market. All right, guys, I'm going to go. My throat's about to give out on me here. But again, if you enjoyed this video, be sure to like it, subscribe to the channel if you haven't, and I'll catch you guys on the next video. Take care.